In the same week that the ETF inflows are back at 3-month highs, BlackRock just made an announcement that is going to centralize even more Bitcoin in their hands. And this move comes only days after the $100 million Bitcoin that was stolen in the biggest wallet exploit in history. But you guys judge for yourself as you watch this clip. Would you be giving BlackRock your Bitcoin to control, to hold on to safely? I think we know the answer, but let's watch the clip before I get into all of the details here.
We've seen the amount of in-kind activity be a growing number over the 3 quarters now that's been allowed. We've been working quite hard to help bring the minimum down because there's interest in this from investors of all sizes. When we first started, 25 million was the minimum that you needed to be able to do one of these in-kind conversions. Now that's come all the way down to around 1 million, and hopefully one day it'll be accessible at any size. That's our hope. And so that's been great progress.
Why is it so expensive?
Well, it's about the size, right? So there's some manualness to the transaction that needs to be undertaken, and so it's about what providers are willing to support just to make the math and the administrative process work.
So just to be clear, so if you're an early Bitcoin holder, you had some in a cold wallet, and maybe you want to move some over to BlackRock, if you have $1 million in Bitcoin, you can just give it to BlackRock through an AP or a third party, and you'll get IBIT shares in return, and that's like a tax-free transaction.
Yeah, so everything is intermediated, as you said, by an authorized participant. So that's the key. We actually don't have the ability to support that directly to investors, but there are a number of participants in the ecosystem who've stepped up and who have been facilitating that for investors, and their willingness to do it at smaller and smaller sizes has been a really positive development.
So there you heard it, guys. So in response to the ColdCard exploit, what does BlackRock do? They lower the minimums for the in-kind redemption. And as you heard in the clip, it's basically you send BlackRock your Bitcoin, they gave you ETF shares. And this is really part of the whole conversation that we've been all a part of recently, where is it too dangerous to hold your own Bitcoin? And there's been a lot of in the Bitcoin community that's like, no, this is not the right response. Do not be sending your Bitcoin to exchanges or ETFs. Maybe send some Bitcoin to an exchange for the very short term until you figure out what you're going to do if you are a ColdCard user. But there has been a very adamant amount of Bitcoiners that have been saying, yeah, this is why we want the ETF. This is why I think most people should use the ETF. And the rabbit hole doesn't stop there. All right. So let's start with how much Bitcoin the BlackRock IBIT ETF currently holds, which is about 811,000, or more precise, 811,291. So as we've heard the rumors and speculation, I think even Larry Fink and them have said it themselves. They're trying to get to that million Bitcoin. Well, this is obviously a good incentive for some people to send them more Bitcoin. And again, as we've been covering, I've been kind of glossing it over on the show, but the ETF inflows this week are back to levels we haven't seen in April. So you could look at it two ways. Either there is smart money that is trying to re-enter the market. And by smart money, I really mean Wall Street institutional investors. They're starting to look at Bitcoin. It's looking a little juicy. They're like, okay, this might be a good buy now. They're going through the ETF, through the institution. Part of that inflow could potentially be this playing out in real time. And again, the rabbit hole doesn't start or really stop there. Yes, BlackRock announced very quickly that they're going to lower the in-kind redemptions, but it is very interesting because a very popular and particular Bitcoiner claims to be the genesis of this move. So we have here on Twitter, British Hodl. You may like British Hodl, you may not, but he is a Bitcoiner. He makes content. He, in particular, said in response to the ColdCard, he went out, he messaged the BlackRock, his whatever hedge fund manager or someone under Robbie Mitchnick, and he was basically saying, hey, look, because the ColdCard hack happened, I think you should lower the minimums on this in-kind redemptions from about 50 million where it started to where it was at 25 million to how low can we get this so that more people can use this product. And he basically said, I was on the phone with them. You know, I talked to them. I was telling them the case and they were like, okay, we're going to listen, which on the one hand, I will give it to BlackRock here. They are listening, I guess, to the customers. That's, I guess, a good thing, right? But it really goes into the broader conversation of BlackRock holding a lot of your Bitcoin. Now, I know there's the institutional custody view. Oh, they're FDIC insured. They have the reputation. But from us Bitcoiners, from the more tinfoil hat Bitcoiner, we're like, this is not the move, guys. This is not the move to send BlackRock your Bitcoin. Though, as you can tell, even from that clip, there is some incentives for a lot of people to send their Bitcoin. Obviously, a tax-free movement. There is more of a reputational arbitrage here, like BlackRock, one of the biggest asset managers in the world. Like they might be able to handle their Bitcoin or your Bitcoin better than you can if you don't trust yourself. Obviously, we've been, or I'll say I've been making the case for a while. I see why there is an avenue for some people to want the ETF. But would I, as a Bitcoiner, would I push someone as a more sovereign Bitcoiner, someone that really wants to hold their own money to send their Bitcoin to BlackRock? It's like, no, that's absolutely not what we're here for. This is not what we're here to advocate for. But anyways, Hodl relates the story. He says, I talked to them in the morning. I think this was like Saturday of this last weekend. Oh, no, sorry. It was Sunday, he says in this tweet. And then later on in the day, they were on the phone. And then on Tuesday, we heard this news coming out of Eric Balkunas, who confirmed that they were doing this and actually lowered it to $1 million, which is a lot lower than apparently British Hodl even was told. And so you are seeing, and here's maybe the crazy part, even better for Bitcoin seeking ETF protection. And he continues to go on. You know, they dropped it from 50 million to 6 million, or sorry, from 50 million 6 months ago to 25 million. Now they're down to 1 million. And went as so far as this morning to post that he has personally talked to 34 people reaching out about this, and about $34 million to $68 million minimum is considering moving from cold storage to ETF, and doesn't include the other hundreds that heard Robbie speak on Bloomberg. So, one, obviously, BlackRock is definitely trying to attract as much Bitcoin into these ETFs as possible. As we know, it's their best performing product they've ever launched, or best performing ETF product they've ever launched. Now they are lowering the in-kind premiums, and of course also talking about, they might even lower it even more to try to attract as many Bitcoiners as possible, or rather as much Bitcoin as possible. Now, as a hardcore self-custody advocate, obviously we're like, this is not the move. Do not go into the ETF. But I guess I see why some people might, maybe not. It's not the product for me. But for everyone out there, probably we're recommending not to do this. And it really, look, if we really want to get as tinfoil conspiracy as possible, this is one of those things that we as Bitcoiners are really terrified about. And it really does lead into the centralization of Bitcoin. You know, the big Bitcoin meme that's going around is like, BlackRock's attracting as much Bitcoin as possible. They want all the Bitcoin because if they have all the Bitcoin, then they have more way into, I don't know, protocol changes, doing whatever they want with Bitcoin, 6102s, all that stuff. But guys, look, I guess flat out, like, don't send BlackRock your Bitcoin. Maybe there's a use case for some people for some of your stack, maybe, and I'm stretching it here, but I don't know. We're seeing BlackRock really make some moves to try to get as much Bitcoin as possible right now. So interesting response from BlackRock with the cold card hack. It's like, hey, you guys can't even hold your own Bitcoin, so send it to us and we will custody it better. This is our job. We are asset managers. We know how to institutionally custody this. We can have institutional grade custody on your Bitcoin. Trust us, bro. And it really is putting fire on the big Bitcoin meme. Institutions are trying to get your Bitcoin. But anyways, so enough trolling.
So I wouldn't even say it's conspiratorial, right? Like, and there's a precedent for this. So BlackRock, because they have the essentially you can buy an index fund through BlackRock, right? And they own a huge percentage of the Fortune 500 companies. And then they use that ownership in the Fortune 500 companies to try to get certain policies, to try to get those companies to, integrate certain policies, right? You heard Larry Fink talking about the whole ESG thing. Now he's kind of backed off of it. So there is a precedent where BlackRock holds a tremendous amount of influence, and then they use that influence to get certain outcomes. Now, could the same be done with Bitcoin, right? Like if BlackRock, holds a big portion of Bitcoin, could they now move to, be pushing for, certain bips, right? And they, I believe there's language in their ETF that kind of gives them that way out.
Yeah, it's something like we can choose which, if Bitcoin does fork, we can choose which fork and which rules we want to follow, and you're basically stuck with what we choose.
So you can see how there's historical precedent that they've used that proxy voting power that they have because they own such large percentage of these companies. They don't own them specifically, but because people are buying the index fund, they're like owning it on behalf of their clients, so to speak. But they still use that power for policy in all these companies. And you can imagine these are Fortune 500 companies. These are the most influential and powerful companies on the face of the planet. So there's historical precedent there, right? As Bitcoin continues to grow and it continues to get adopted by nation states and governments and more Fortune 500 companies, you can see how they could potentially use their power to back a certain fork of Bitcoin that isn't exactly in the best interest of individuals, right? So I would, and I've been getting this question actually the last couple of weeks since the infamous events of July 30th, where the ColdCard exploit was found. Wow, it's almost been 2 weeks since then. Time flies. I've been getting questions from people saying, hey, they're questioning the very idea of self-custody, and they're saying stuff like, why don't I just send my Bitcoin and keep it on Coinbase Institutional, right? And some of them are like, why shouldn't I just get the ETF? Like, this stuff wouldn't even happen to me. And I had to go through this whole explanation about why self-custody gives you sovereignty. And yes, it might be more complicated, but it gives you freedom. So, the events of July 30th really hit the self-custody movement hard, right? We had 22,000 Bitcoin that left self-custody and were sent to exchanges. So the ETF looks like an even better idea than it did before July 30th for a lot of unsophisticated Bitcoin buyers or investors, right? They're looking at what's happening in the Wild West of sovereignty lands, right? Which we constantly advocate for on this show. And they're like, hey, wait a second. Like, are you saying I could just open my Charles Schwab account and just get exposure via the BlackRock ETF? Like, I know, quote unquote, I know BlackRock isn't going to rug pull me. So yeah, I mean, it's kind of like we're fighting against two opposing forces, right? There's the convenience, which I think a lot of Bitcoiners underestimated, because I think the original vision was, hey, everyone's going to take self-custody of their Bitcoin and fix the money, fix the world. That was the original vision. But like, I think people underestimated the human condition and just humanity in general. Like, I think most people on the face of the planet don't mind giving away liberty in exchange for convenience. That's the reality. I would add to another part of that and say that the lion's share of the world's wealth is held by people that are over 50 years of age. And they're used to operating in the traditional financial system. So for them, and I've experienced this so many times, for them, the idea of self-custody is alien, it's strange, it's risky, right? The term that I heard when I spoke to some people that worked in one of the large traditional wealth management banks was outside of the system, right? That's what they said to me, right? They're like, yeah, like Bitcoin and self-custody is outside of the system, right? It's very telling when they're using those words. Like it reveals exactly how they feel about Bitcoin and self-custody. So moments like these, more than ever, is where we as Bitcoiners, we have to double down on our conviction. We have to double down and we have to remember why we are here. And I know it's the bottom of a bear market. I know, the sentiment, I don't think I've ever seen it this bad in my 10 years in Bitcoin. I've never seen the Bitcoin sentiment as bad as it is today, despite the previous bear markets having significantly more volatility. You're talking about 80% drawdowns. You're talking about 75% drawdowns. But we were all in the trenches and we knew for a fact Bitcoin was going to come back stronger and better than ever, which it always did. This is the first bear market where I'm seeing that loss of conviction, and OG Bitcoiners, they're coming up to me and they're asking like, Nico, is it over? Is it done? And to me, that's a positive signal. And the reason I think it's a positive signal is because this is the sentiment we had back, and this is before my time, but from what I've heard and the conversation I've had, this is the sentiment we've had back in the 2014, 2015 bear market, where the Mt. Gox exchange hack essentially blew up the industry. There was no industry back then. And so many people left, but it set up Bitcoin for a generational run. Like if you bought the bottom of 2015 where it was trading at $300 a coin, you could have rode that up all the way to 20K. I don't even know what the multiple is on that, but $300 to $20,000 peak. Even if you bought $300 and you rode it all the way down from 20K to 3,500, which was the bottom in 2018, that's still more than a 10x in 2 years, right? And if you held it from $300 to the all-time high of 2021, 69K, that's a ridiculous return, right? So obviously the market cap of Bitcoin was significantly smaller back then, so it was a lot easier to move the price, right? Which is why the volatility has dampened now because the market cap is so big. But the case that I'm making is that I think that the companies and the individuals that survive and hold on to their stack, while everybody is leaving, while all the tourists are leaving, like we played you guys a montage of all the billionaires that are saying like, Bitcoin's over, it's done, and blah, 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 blah. My perception is I think you're going to be greatly rewarded. And again, not financial advice. I'm just telling you what I'm doing. When the bull market, inevitably comes back. It always comes back. It's infinity divided by 21 million. And I wouldn't be surprised if we had this crazy run up from, the current price of 63,000 to $500,000 per coin in the next bull market. Like I would be a little bit disillusioned and disappointed if we didn't have a euphoric bull run. And I saw Mahlers on a podcast, I think it was the Natalie podcast, where like Mahlers was basically making the case like we haven't had a Bitcoin bull run since 2021. And in a way that's true. I mean, like if you bought Bitcoin at the top of 2021 for $69,000, not even accounting inflation, right? You're down right now on your investment by like $6,000. And it's been 5 years. We're 5 years older, half a decade, right? So you can imagine the disillusionment there. Also, Bitcoin hasn't made an all-time high or barely made an all-time high in gold terms. And I think that's a better representation of where Bitcoin should be making all-time highs. because like gold essentially has held its value. Like if you had $1,000 worth of gold 100 years ago and you have $1,000 worth of gold today, it would essentially equal the same purchasing power. So what $1,000 worth of gold would have bought you 100 years ago would equal about, you know, what $1,000 worth of gold would buy you today in US dollar terms, right? It's not that gold is increasing in value. It's that fiat is losing its value, specifically dollars. So I think like if you're looking at Bitcoin, I think rather than pricing its all-time highs against dollars, I think you should be pricing its all-time highs against gold, right? I think that's a much better indication. I think as Bitcoiners, I think the lowest minimum of Bitcoin success would be of Bitcoin reaching the market cap of gold, which would essentially make one Bitcoin equal to 1.5 million US dollars if and when Bitcoin reaches the market cap of gold. As Bitcoiners, we obviously believe it will, and it will go far beyond that. But I think that this specific bear market has called that into question. And I think people are feeling the pain because they waited. They waited, right? They waited. And it was still an epic run. Don't get me wrong. Like 16K, I think was the bottom to 124K. Like if you bought the bottom and you rode it all the way to the top, you had a great return. Even if you didn't, even if you rode it back down, like from 16K to 64K, had a great return. But what other people are talking about is like, but wait a second, like, what if I just bought NVIDIA? What if I just buy one of these like AI companies? What if I just bought SanDisk? SanDisk 50x'd in 1 year. That's like meme coin type of volatility, right? And I think that's where kind of investors are looking at, right? They have this disillusionment of Bitcoin, and we have this meme. We created this meme, which is like, hey, and we've moved the goalposts as a community, by the way, on this. I'm just letting you guys know. The meme was, no one has ever lost money if you've held on to Bitcoin for 4 years. That meme is gone. It's over. It's over. It's not true anymore. If you bought the top in 2021 and you held for 5 years, you'd be down on your investment in US dollar terms, right? So the goalpost has moved, right? We're moving the goalpost a little bit. No one has ever lost Bitcoin if you've bought Bitcoin and held it on for at least 8 years. Like that's a new meme, I guess. So I don't want to be a negative Nancy or be pessimistic or anything.
Comes on, he's bearish.
Pessimistic or anything like that. But I think these times right now are when legends are made, are when legends are forged. Because when the bull market does come back, all the tourists, all the non-believers, all the people that were into Bitcoin purely for number go up and they weren't in it for the revolution that it is, they've all left. Only the true believers remain. That's my perspective, right? And as I predicted back in October of 2026, I told you guys, or sorry, of 2025, I told you guys that the bottom indicators of this cycle are going to be capitulations from the Bitcoin treasury companies. I'm not going to get into any of the specific ones because a lot of these people are my friends, but the vast majority, not all of them, but the vast majority of Bitcoin treasury companies have sold Bitcoin, including Strategy at this point, right? So, you know, this is kind of where we are in the cycle. The good news is, ladies and gentlemen, if the 4-year cycle holds, and it's the only thing that has held so far, this bear market should be ending in the next couple of months. Like October should be.
It already did.
October should be like we've either already bottomed or October should be the bottom. And then I'm extremely bullish about 2027. So while everybody is just like looking for the shiny new toy, you people that are listening to the audience right now, these are when legends are for. These are when legends are made. This is when your conviction gets tested. This is when you double down and you get rewarded for doubling down, right? So again, not financial advice, just some observations. I do believe our guest has joined. Is that true, Opti? Okay, so we do have our guest. I'm excited to bring him up and talk to you guys about it. So we're going to be right back just after the break.
Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY.
All right, everybody, before we get into today's interview, at the time of recording, the Bitcoin price is $63,510, block height 962,166, market cap 1.27 trillion. I want to welcome today's guest, John. Thank you so much for joining us. How you doing?
Hi, thanks for having me. I'm great. How's you?
Doing great, doing great. Pretty historical couple of weeks, John. And by the way, for anyone, the audio listeners, John is the firmware lead at Trezor. But essentially, for anyone who has not been tuned into Bitcoin Twitter or YouTube, the events of July 30th really shook the community to its core. Because again, one of the leading Bitcoin hardware wallet manufacturers, all of a sudden, their entropy wasn't so great. And a lot of people that did everything by the book, stayed humble, stacked sats, and then put your Bitcoin into self-custody, those individuals were affected, right? So now we have John from Trezor, and he's the firmware lead at Trezor, guys. It's self-explanatory. So I have a couple of questions for him, so that you guys could inform yourselves and get the right tools to properly take self-custody and not get your Bitcoin swept or stolen. So first, I want to talk about the ColdCard incident. It shocked Bitcoin. It shocked the self-custody world. From the perspective of someone who works on hardware wallet security and firmware every day, how are you and the team at Trezor looking at this type of failure?
So it's hugely sobering, and honestly, it was pretty scary. Like in the first moment, there's this sinking feeling, like you always unplug the kettle, but then one day you drive by a burning building and suddenly it's, oh, damn, did I unplug this time? Did I forget? Because seed generation is one of the most security critical parts, right? If something goes wrong here, then everything coming from that seed is inheriting the problem. It's game over. So this was scary. And then when details came out, then it turns out that yes, we did unplug the kettle, figuratively speaking. Our safeguards held. So then it was time to figure out the lessons that we should learn here. What we can do to make it less likely that we are hit with a similar problem going forward. And that's what we've been doing so far, essentially.
Yeah, it's definitely scary, man. And if my memory serves me correctly, John, like the ColdCard original code base it was based on Trezor's, was it not?
I'm not super sure because I don't follow the politics of these things. I know that we have some forks, and I believe the ColdCard was one of them, but I couldn't tell you for sure. I know that they relicensed their code, which was the place where this bug was introduced. So that was super unfortunate. But it does mean that they no longer have any code from us, because moving the license required getting rid of all of it.
So, John, another question for you. Many Bitcoiners are also questioning whether single signature is enough. How should people think about the trade-offs between single sig and multi-sig? Specifically because there's different ways to approach multi-sig, right? You can have collaborative custody, collaborative multi-sig setups. You can have sovereign multi-sig. Has your thinking changed at all in light of recent events? Like, should someone who's taking self-custody and has their Bitcoin on a single signature device, should they be thinking about that setup? And should they be looking more at multi-sig solutions?
So my thinking hasn't changed that much. And the answer to the question, should you be looking to upgrade, is maybe. It's important to say, I don't think it's true that single sig is dead and everyone should move. That's the wrong lesson to take away. Because multisig makes a lot of sense when it applies to your situation. But before you even consider that, you need to consider the cost. And the cost, obviously, is more complexity. When you're doing security, there's this so-called KISS principle, which says keep it simple, stupid. And for the average user, for someone who just wants to stack sats and not really think about the whole problem, this simplicity brings an actual tangible security benefit. If you have a good hardware wallet and your seed is stored safely, this covers the dominant threat model, which is remote attacks and possibly phishing. And there's much less to mess up about your setup. You're not going to lose money because you do something wrong. But yes, like if you're protecting your life savings, if you have a huge amounts of money in Bitcoin, then in that case, absolutely, you should investigate multisig. And this hasn't changed. This has always been true. Like if the amount is significant, then you should totally invest into the additional complexity and pick the right multisig solution for you. Just before you do it, stop and consider, is this right for my situation or not?
Yeah, absolutely. And I think that's something that the community could have done a better job at. And we're guilty of this ourselves. And I think the reason as to why most people didn't, or most creators, Bitcoin creators, didn't advocate specifically for multi-sig is because it just adds a layer of complexity to it. And I think that our goal was really for people to take self-custody, right? We would have never have imagined, which again, it happens so many times throughout history, right? It's unimaginable until it happens, and then it becomes obvious in hindsight. That, you know, again, the people that did everything right, stayed humble, stacked sats, put those sats into self-custody and one of the devices that the market perceived as being the gold standard. You know, and that device failed them, right? I think that a lot of people could have never have imagined that. Now, I do want to move on to kind of like practical advice for Bitcoiners. So for the average Bitcoiner who's spent years accumulating their stack, what practical habits or setup recommendations would you emphasize today? Are there best practices you think have become more important after this incident?
So it's, of course, human nature that when something bad happens, we look for ways to stop it from happening again. And of course, if you're directly affected, if you had the affected ColdCard, then you need to follow the recommended security steps as soon as possible. But otherwise, many people are not going to like this answer. But I think the old best practices are still valid today and still super important. And unfortunately, there's like keep to the old thing, keep to the old ways, and you're going to be fine, hopefully. It's super important to do the basics. It's always been important, and it continues to be important. You have to choose who you trust, pick a reputable vendor with, proven history, preferably open source, where a lot of eyes are looking, someone who has big bounties. And yes, I need to acknowledge the elephant in the room. With ColdCard, people absolutely did all this. They, as you said it, they did everything right, and it didn't help. They still got burned, and that's true, and that's unfortunate. But it does not make any of this advice wrong. It's still correct. You still need to do these basics. You need to learn, you need to understand what you're doing, understand what the seed phrase is. It's the ultimate key to your savings. Don't ever give it out. Make sure that your backup's good, it can't burn down, be thrown out. And only when you feel confident in the basics, then it's time to take the next step. And one option is using passphrase. And even more so than with the seed, it's super important before you start doing it to learn what you're doing, what a passphrase does, how it works. Make sure that the passphrase is also backed up securely, because if you rely on your memory, then you're just one head injury away from losing your savings. And of course, you need to run backup checks, check that your backups are good, that you can actually recover the coins if you need to. Yeah, that's about it. There's a lot of talk in the community about like dice rolling your own entropy. And here is where I would be extra super careful. And the reason is that entropy is a tricky subject and there are subtle traps. So this is not something that should go into the newbie packet. This is for advanced users. Right now, I believe the situation will improve in the coming months and years. But right now, if you're doing this, you're basically on your own. There's no guidance, definitely not from your wallet vendor, unless you're one of the few who do it. So only do this if you're actually confident that you know what you're doing. And perhaps most important at this time, especially when something bad like this happens, when there's a catastrophic events, you have to fight your anxiety, you have to stay calm, because your coins are actually much, much more likely to be taken by scammers exploiting your fears than by some sort of hack.
So a question for you, and let's get into like more of the technical aspect of it, right? So why should people trust Trezor's random number generator and its own entropy? What are you guys doing specifically that mitigates the type of exploit that ColdCard had?
We actually have several features. I will start from the basics. And the very basic thing, an issue with entropy in general, with problems like this one, is that you cannot detect them automatically because it involves randomness. It's impossible to mathematically tell whether a number is actually random or not. Like, let's say I give you a number and the number is 12. Did I generate it randomly, or was I just looking at today's date? Could be either. You can never know. So what we do here, the main thing about Trezor is the culture. Every single line of code that goes into our firmware must be seen by at least one person that didn't write the code, preferably two if possible. And in case of security critical parts like seed generation, it's more. And the reviewers must be not just anybody, it must be someone who's familiar with the subject matter. So that's the first thing. If we're touching ever anything related to entropy, there's a whole gang of skilled people looking at it, because and of course, we involve AI too these days, so that helps too. Second, we have, from the very first Trezor 1, there's a feature that would actually prevent this bug altogether, and that's mixing entropy from different sources. There's at least two. On the Trezor 1, it's two. On the newer ones, we mix in the secure elements. But the two is the basic. And on one side, you get the entropy that comes from the device itself, from the chip, from the secure elements. And on the other side, you have entropy that is contributed from your computer. And these two are mixed together, so neither side has the full thing. So even if in the worst case, if, I don't know, our random generator were malfunctioning, then your seed will still be safe because there's the entropy from the computer mixed in, and that makes it good. And As it happens, last year we implemented a feature called the entropy check. It's in Trezor Suite. It doesn't work for your existing seed, unfortunately, but if you generate a new wallet, it gets automatically entropy checked. And what this does, in layman's terms, it checks that your Trezor is generating the seed correctly. And if you dive into the details a little, there's verification that the entropy from the computer actually does get mixed in, and you get the results that are actually random.
Gotcha. So again, there's no single point of failure in the random number generation. It's using data from your computer, and it's using data from the Trezor wallet itself. And just so I understand the full set of how the exploit happened, wasn't ColdCard attempting to do that also? I believe that they were tapping into two different pieces of hardware on the device. So I guess the Trezor's way to mitigate that is to basically say, let's assume that, you know, the Trezor hardware device in and of itself isn't, you know, properly, I'm not saying this is happening, but isn't properly generating a true random number. And the way that you guys are mitigating that is like, let's use your computer as well.
Essentially, yes. So the problem with what ColdCard actually cannot do, and that's because the device is air-gapped. There's a trade-off. You gain some things with an air gap, but you lose some things. And one of the things you lose is the ability to basically do this sort of cross-check, do a completely independent source of entropy. Because the problem might be that you think you're calling the right function. This is what happened with ColdCard, and you're actually calling the wrong one. And in our case, in case of this double check, we cannot call the same function to get both. We need to call two different ones. So the mixing definitely needs to happen. But there are additional features in the code that prevent us from calling the bad generator. We actually also have a testing generator, which is weak, and we have several mechanisms to make sure that this never gets into the actual hardware. And we are actually building more sort of tripwires in light specifically of the incident. We changed the testing generator to, instead of generating random looking numbers, it's always generating the same sequence. So first of all, we can test in our testing environments that we get the sequence that we are actually calling the thing we want to call. And on the other hand, if we ever see the sequence on hardware, then we immediately know that there's a problem. And this alone is not sufficient. This catches one specific kind of thing, but we're adding several measures like this, and they act like tripwires. So if anything goes wrong, at least one of them should trip and alert us to the problem.
Gotcha. Okay, that makes sense. And all of this code is open source as well, correct?
Absolutely.
And then I know with the Trezor, the latest, the Trezor Safe 7, if my memory serves me correctly, you guys are going to be the first to market with a secure element that is completely open source itself. Is that true?
Well, unfortunately, we cannot say that it's completely open source, but because in the hardware world, you cannot get there. Basically, you cannot buy IP that's completely open. So what the secure element, the Tropic 01 is doing, they're completely auditable. The parts that do cryptography are open. You can download them on the internet and review them yourself.
And what's the benefit of having, because there's now 2 secure elements on the device, what's the benefit of having 2?
It's kind of that more is always better. We trust on the Safe 3 and Safe 5, we trust the Optiga secure element. And in the unlikely case that there's a break in the secure element itself, there's still the main chip that holds down the fort. And on the Trezor 7, you have this additional measure. Like if there's a break in Optiga, you still have the Tropic protecting your seed. And contrary, if we find a problem in Tropic, or if someone finds a problem in the open source part, there's still the Optiga that's unbroken. So you have 2 layers of protection for the encryption of your seed. You have 2 additional sources of entropy. So even if one of the chips was malfunctioning, that's still the other chip is fine, and still the sensor chip is fine, and still the computer is fine. It's about building layers, and it's about building redundancy.
So also to what we've seen since the exploit was discovered, it often triggers this second wave of phishing attempts and social engineering attacks, where people are vulnerable because, again, they don't often feel secure in, you know, their self-custody setup, right? And we've seen this already happen, where you have fake emails coming from ColdCard, basically asking people to click a link, et cetera, et cetera. From Trezor's perspective, how should the industry prepare people for those secondary threats? And what warning signs should users be looking for?
Well, so there's this one simple golden rule. I'm sure you said it multiple times. I have said it multiple times. I kind of feel stupid repeating it, but on the off chance that there's someone in the audience who didn't hear it or needs to hear it again, the single golden rule is do not give out your seed ever. If something asks you for your seed, you should view it with suspicion. Do not enter it computer, into a phone, don't tell anyone, don't take pictures. Now, like when the official wallet app asks you to recover your wallet and to enter your seed into the computer, then what you do is you do not do it. When the support person needs to help you and needs your seed to do it, you do not give it. When there's a critical vulnerability and your funds are at risk, especially then, you do not enter the seed. Always stop and think. When it's, I don't know, the literal police asking you, then you don't give out the seed unless you have, I don't know, a lawyer in person present and they're advising you that in this one special case, it's okay. Otherwise, just don't. Like actually a good thing you can do is store the seed somewhere away from your home, because then you don't have it on hand and you can't give it out. That's the one half of it. That's what the users can do to protect themselves. And there's the other half, and that's on us, on the manufacturers, and that's about communication channels. We need to have official channels set up. We need to have them accessible. We need to tell people where they can find them. And importantly, when a bad thing like this happens, we need to be clear and we need to be quick about responding. We need to say who is affected, who isn't affected, what you should do. And if we do everything right, and then the user, you see an urgent message telling you to secure your wallet now, you need to stop, take a deep breath, count to 10, then go and verify the information through the official source. I know it's difficult in the moment, of course it is, but we have to try to not let urgency override the security stance.
Gotcha. So yeah, I think it's very sound advice, right? Take a deep breath, and I think people really need to understand, you know, your seed phrase should have absolutely no exposure to the internet whatsoever. So, you know, that includes taking a picture of it. That includes putting it into your phone. That includes, you know, putting it onto a website or onto an app, right? You know, the way that I describe it to people is your seed is essentially a password for your money, for your Bitcoin, right? And then once you wrap your head around that, right, you got to ask yourself, where am I really putting in this password, right? So it's very sound advice, and you know, it's important. And I know, John, that we repeat ourselves 1,000 times, but I'm just thinking back all the years that we've done this, how many times those repetitions have helped people, right? So I think I want to steer the conversation in this direction, right? Which is kind of like the overall lesson for the industry. incidents like these tend to push the entire industry to improve. And I would agree. I would say self-custody, even though in the short term definitely took a hit, the movement, I would call the Bitcoin movement and the self-custody movement one and the same. But what lessons do you think Trezor and the broader hardware wallet ecosystem will take away from the ColdCard incident? Where do you see the biggest security improvements happening over the next year or so?
Yeah, so the obvious game changer here is AI, because even, I don't know, 3-4 months ago, only a handful of people in the entire world could discover an issue like this or exploit it. But today, anyone can fire up an AI agent and say, hey, find me some vulnerabilities and give me some exploits. And it's just going to happen. So the huge lesson here and the shift is that we as an industry absolutely must lean into this, use AI defensively, proactively. We need to be the first to ask, first to find the problems, and then fix them before the attackers have a chance to exploit. And as a flip side, we also need to keep humans in the loop, because at least today, this might change in a year. Today, AI struggle with the wider context, because if the chatbot writes you a patch, you cannot blindly apply it. You need to understand deeply the problem and the fix to it. And you need to be sure that you're not creating a new problem by patching the old one. More generally, the principle is old, but it's more important than ever, is that security critical systems must be designed assuming that the individual components can and will fail, and we need defense in depth, and we need layers of protection. With the entropy here, you want multiple sources, you need to verify code paths by manual and automated methods. Ideally, you would like some runtime health checks, stuff like that. And the broader lesson is that we can never rest on our laurels. Security is never finished. Even if there's an incident and it does not affect us, it affects a different vendor, we need to take the opportunity to take a hard look, revisit our assumptions, take the lessons that we can.
Absolutely. So final message to the audience right now. John, if you could leave Bitcoiners with one piece of advice after everything that's happened over the past few weeks, what would it be? What should people focus on to keep their Bitcoin safe without being overwhelmed by fear?
Yeah, so that's the message. Like, take it seriously and don't let fear drive your decisions. If something looks serious, take a deep breath. Think about it carefully, educate yourself, make sure your backup is secure, make sure you're up to date, understand the features you're using. And I don't think we should lose confidence in self-custody because of this. This is a catastrophe, epic level incident, and incidents like that happen, unfortunately, and it's very sad. And we should take them as an opportunity to review our setups and increase our confidence in what we do.
Absolutely. Completely agree. John, it's been an honor having you on today's show. Thank you so much for joining us. Again, John is the firmware lead at Trezor. Trezor's one of the first Bitcoin hardware wallets. So it's great having you on today's show. Thank you, John.
Thank you for having me.
Appreciate it. All right, everybody. Today's going to be a great show. We still have another guest coming up later on today's show. But before we get to that, I do want to bring up a piece of news. I don't know, Opti, if you brought it up yesterday, but I don't know what's going on with the share screen. Oh, okay. Here we go. Anyways, huge letter from 21 Capital yesterday. Definitely recommend checking out the CEO's website. Good friend of mine, Hafa Zaguri, 21 Capital, just released a shareholder letter yesterday. Definitely recommend going to Hafa's X profile to read the entire thing. And we have an exclusive interview with him, which we're going to be dropping clips of throughout the week. And then we're going to try to get you the full interview released out with all the bells and whistles on Saturday. But I do want to read some of the community's reaction to it. This is a significant change from how I wouldn't even call 21 a treasury company. I would call 21 a Bitcoin operating company focused on generating cash flow. On top of having Bitcoin on their balance sheet, 21 is the second largest, right after MicroStrategy, holding, I think, 43,000 Bitcoin. So it's pretty significant. But I believe like this is the future. This is the new direction of where this is going. So, of course, we have Simply Bitcoin's president, Mike Germano, reacting to it. He says, first 21 shareholder letter from its new leader, Hafa Zaguri, lays out an exciting vision for what the company can become. Worth the read. Our industry needs a champion like this, a holding company that is not trying to replace owning Bitcoin, but is built to be powered by it. Here is Rod. Rod is the founder of Bitcoin Park and the Imagine If conference. Really recommend it as well. And Rod actually highlighted a part of the letter, which I think is really important. So one more thing. 21 depends on software we do not and should not control. The protocol, the wallets, the tools, miners, and node operators run every day. Most of it is open source, maintained by a small number of engineers with no obvious way to get paid. Expect us to do our part in strengthening that infrastructure without strings attached. I will finish with this. 21 is not a substitute for Bitcoin. Investors who want pure Bitcoin exposure should understand that Bitcoin itself is the cleanest expression of that view. 21 must earn the right to be something different, a way to own the build around Bitcoin. That is the standard. So awesome letter from Hafa. Again, dear friend, and I'm very, very bullish on his leadership and 21 in the direction that he's taking it. And we'll have exclusive clips of my interview with him backstage at Mining Disrupt dropping throughout the week. And then we have an exclusive, we'll drop the full exclusive interview later this week. So stay tuned for that. Should be very, very exciting. Anyways, guys, we're going to move on to our next segment. We have Francesco from Bitvault, not Bitvault as in my handle, but Bitvault, VOULT. And again, he's going to be talking about more ways that you can take your Bitcoin into self-custody without sacrificing your sovereignty in a secure fashion. So we're going to be talking about that just right after the break. We'll be back in just a little bit. I want to give a shout out to our partner, Ledn. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledn fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledn's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledn's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledn. If you ever thought, what happens to my Bitcoin if something happens to me? Or what happens if I lose my phone? You're not alone. For a lot of people, the biggest barrier to self-custody isn't buying Bitcoin. It's the fear of making a mistake. And that's why I like Bitkey and I recommend it to my friends and family. Bitkey is a Bitcoin wallet built for real life, not just for day one, but for everything that happens in between. Lost devices, upgrades, accidents, and long-term ownership. There's no seed phrase to write down and worry about losing, and no single point of failure that can lock you out of your Bitcoin forever. What really stands out about Bitkey is the peace of mind. Recovery is built in. Inheritance is built in. It's a complete self-custody system built by the team behind Square and Cash App, designed to make holding your own Bitcoin simpler and safer. Take self-custody of your Bitcoin today using Bitkey. Go to bitkey.world and use promo code SIMPLY for 10% off your new Bitkey. That's bitkey.world, promo code SIMPLY. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or HIVEdigitaltech.com.
Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, cell towers can fail. Hurricanes, cyber attacks, blackouts, most people go dark. Satellite phones don't rely on local infrastructure. With Iridium, 77 satellites in orbit, you can stay connected across the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123 also has Starlink, battery backups, Faraday bags for your hardware wallets, and everything you need to build your own off-grid Bitcoin citadel. Go to sat123.com/simply and use promo code simply for 15% off anything in the store.
All right, everybody, we are back, and we got our guest today from Bitvault. Dude, you kind of took my handle because my handle is Bitvault, but with an O. Mine is with an O. So it's So when I say Bitvault, I'm thinking of my handle. Because I'm Bitvault.com, but this is Bitvault VAULT.SV. So it's different, but it's pronounced the same, but it's different. Anyways, Francesco, thank you for joining me on today's show. You're the CEO of Bitvault.sv. What is it? How can it help people? And then what are your thoughts on the day of infamy that I call July 30th, where self-custody was called into question by a huge portion of the community? And what is your product setting out to fix?
Hi, everyone. Nico, I consider that you will be the original Bitvault, but given that you invited me, it's it's given. So thank you for that. And yes, I was caught by surprise. I developed Bitvault in these 2 years to offset the problems of physical attacks and hacks, because there were 2 of the 3 major problems: self-custody, together with the loss of the keys in non-custodial. But, well, nobody could have imagined that the entropy of hardware wallet was actually a problem, until we found out, unfortunately. And to also my surprise, it came out that given the technology we utilize, Miniscript, our vault would have been the only vault in the world which wouldn't be affected by the loss of entropy of both commercial hardware wallet in a 2 of 3 setup. And the reason comes down to the fact that you can trust either the hardware wallet entropy, which fortunately didn't end well, or you can rely on your own generated entropy with dice, or you can just, with our security protocol on Miniscript, you can just trust the Bitcoin protocol as a source of security for your holdings. And the reason is how it works is that the Miniscript we operate in our descriptor, in our on-chain configuration, this vault, has 2 spending paths. The first one with a short time delay, which is for protection against physical attacks and hacks, because it's like in the Vault bank, like Bitvault is a bank, and traditional banks there is a time lock, so attackers don't even attempt the heist because they know in advance it's useless, and also hackers, they cannot extract anything, right? So it's quite effective, and we bought into self-custody on chain, and then. There is a second spending path, which is has a longest time delay, like 1 year, which is the fallback path, which allows the user to unilaterally move the funds with his own 2 keys of the multisig. exactly like all of the other collaborative custodies which are out there. But the other collaborative custody services, if both hardware wallets you lose the entropy, leak the entropy, well, the funds are gone. With us, it cannot happen because out of these two spending part, the one a short time delay for protection and the other one with a long time delay with your own two keys for self-custodial fallback, you can always move even if Bitvault fails. That one always gets rolled over by refreshing UTXOs once a year. Therefore, it never matures. Therefore, the attacker, even if it has the seed of both your hardware wallet keys, it cannot move the funds because there is a time lock at 1 year. And you, as a user, can always move before of him in 1 week or 15 days with just your one of your keys plus the other keys in a Bitvault HSM. So this programmability, it's what you want to have, which is way, way better than any other hardware-generated entropy or also your own entropy. And on top of that, why even if you roll the dice 200 times and you're pretty sure, why do we have to risk it? Just put an additional layer of security on top of it by the time lock we offer. So it's really a no-brainer. And I think everybody should at least try to download for the iPhone. It's on Bitvault.sv. There is a week free trial. You can test it. You need 2 iPhone on testnet or one hardware wallet with a passphrase, a Jade Plus or a Keystone Bitcoin only. And more hardware wallet will be added later on. But at the moment, it's really free to test it. I invite you to discover this amazing new way to protect your funds thanks to the Bitcoin protocol. There are no software solution, no server, no watchtower, nothing. Pure on-chain, pure miniscript technology with protected time locks, like it should be, like it always has been in traditional finance. Well, let's bring it into Bitcoin and solve all of the problems of self-custody.
So it's fascinating. And I think people don't realize that time locks are built into the protocol, right? And there are some wallets that allow you to use that mechanism. But essentially what a time lock is, guys, is that you can't spend until until a certain block height is hit, right? So what you can do is that you can estimate the amount of time, right? It's not going to be precise, but let's say every 10 minutes there's a Bitcoin block found, right? And the protocol kind of changes the difficulty to keep it around that 10-minute mark. But because that is, I don't want to say set in stone, but it creates a certain amount of predictability where you can guess in time, right? Okay, this is what the block height should be in a year based on that 10-minute time, right? You can have a good estimation, I would say, to the day, really. And what's fascinating about your product, Francesco, and thanks for joining on. By the way, I was teasing you on the Bitvault comment. I didn't want people to get confused because they know my handle, and I want people to understand the difference between Bitvault, VOULT, and then Bitvault, which is VOLT, how I spell it. So it's fascinating that you're using tools that are on the protocol level. This is not something that you're building on top of into your proposed security solution, right? That's really good. And I love the idea of time locks too, because like, let's say you want to give your Bitcoin to your kids, right? But you don't trust them at 18 years old with an inheritance, right? You can estimate, the rough timeline where essentially you can time lock that specific Bitcoin transaction until they hit the age of 25 or 30, right? They might hate you through the process, but at least they know that eventually one day, you know, at a certain block height, you know, they'll be able to use that Bitcoin. So it's just fascinating that I haven't heard about this specific approach being used by other products. So it's fascinating that you're using something that's on the protocol level in your product design. And again, guys, what we've been doing for the last 2 weeks is giving you all the options to you know, self-custody your Bitcoin safely and properly. And this one's very unique. I really like the, you know, I really like that you're using something on the protocol level, which is very, very interesting. So could you talk a little bit about what the sign up process is like, Francisco? Like, is it kind of like a multi-sig where you're using different wallets, and then Bitvault is holding another key? What is the sign up process like?
Yes. At the moment, is of course only hardware wallet are allowed. You need to hardware wallet. You can do it one, but the idea of the multi-sig is a 2 or 3 is that you have 2 keys in 2 different geolocation, and we also advise to have a copy of the key, maybe in a bank vault. So you have 4 keys to lose, which is quite impossible. You should lose 2 out of 4. The odds are not in your favor not to lose it. So the signing process is an iPhone app at the moment because it's the best way to onboard people who are also less skilled, and the onboarding is really immediate. You only need to have 1 week for free, and you can create a vault at the side. What is interesting, we just ask for an email. You can have a Proton mail, you create with your VPN, and you insert your Proton mail because we need to associate one email account. And then you create your vault. You need a Keystone Bitcoin only, or a Jade Plus, or both, mixed setup, maybe it's better. And it's solely air-gapped. You will scan 1 QR code, generate the seed in the hardware wallet, and the iPhone acts as a coordinator. Then it will make scan a second QR code, and then a third scanning to close the loop. So in 3 scanning, you have created the vault, like 5 minutes. And then you will have a descriptor, which is like the public key with all of the time delay information you have to set at the wallet origination from 2 hours to 15 days. That is another delay. This is important. You cannot change the delay, not even yourself. If you want to move the funds, you have to wait until that time delay expires. It means that you have to be mindful that you need to select the right time delay according to how much fear you have, how much holdings you have. And that is personal. Once you do that, the vault is set as, let's say, 1 week time delay. Fine. Now, if somebody physically attacks you, a pop-up shows up, like in the bank's vault, to say, hey, there is a time delay with the countdown. I'm sorry. Take the Koi wallet, or you should try with the Koi wallet first, and say the pocket change and go away. I mean, they will do it. There's no reason to stay with you for a week or 2 weeks. Then the hacker is anything. Now, let's say you wanted to broadcast a legit transaction. You just use one of the 2 keys. You have one of the 2 hardware wallet. The third key in this version, our HSM hosted, and then you need 1 key out of the 2 you have, and the other key is co-signed by us, like the other collaborative custody, only after the time delay has passed. And so you can say, is this a software solution? No, because the analog time is embedded into the descriptor, and the software we have as the cosigner, the convenience service, checks if that analog time expressed into the descriptor is the same which is brought to him for the transaction to be signed. If it matches, it's signed. If it doesn't match, it doesn't. But anyway, even if there are mistakes and the transaction goes to a mempool, the PSPT comprises the unlock time. So the nodes at the protocol level will not accept the transaction. So that's why you have on-chain security. Then if everything is fine, it's fine. If Bitvault goes out of business, or you can also self-host a convenient service in the following version or number. Anyway, if you lose it, the machine doesn't work or we don't disappear. It's not a problem because you can use your 2 hardware wallet, you can sign. After 1 year, you will receive the funds. And that bypasses the convenient service and gives you safety and makes it trustless and non-custodial. The signing procedure I described, and the second one is the maximum is 1 year because there is a limit on the Bitcoin protocol, which is 1 year for the time lock, 1 year and a few days. So we set them in 1 year. Then if you want to use it as an inheritance tool, not to allow your kids to do it, you can still do it. And you can just roll over the 1 year every year. And we see in the future if we can give a more custom, to make a more bespoke service. But at the moment, the main goal is to protect against physical attacks, hacks, and loss of entropy, thanks to the on-chain time delay as a form of protection, like it should be. And we brought it into non-custodial.
I love it, man. I love it, and you know, it's a very interesting approach, and I like the time lock idea, and for you guys to like kind of wrap your head around, right? The whole concept of time lock is essentially, you know, it's going down the $5 rent attack conversation, right? Which is, and you see this a lot in France, unfortunately, where there's a lot of break-ins and people, you know, getting in there, and you know they're being coerced into sending their Bitcoin. And what happens with time lock is it doesn't matter. You still can't move your Bitcoin, right? So that actually kind of moves the advantage more so to your favor, because from an attacker's perspective, they're working with time, right? So the more time that it takes to conduct a physical attack, the less probability it will be to be successful, right? So they kind of want to go in and out, right? So the less time they take for them to extract the Bitcoin out of you, the more advantageous it is for them. If you have a time lock of a year, like, what are they going to do, right? Are they going to hold you for a year, right? Like there's kind of, you know, there's different conversations for that. In their mind, they're doing the equation, and they're like, wait a second, like this isn't going to be as simple as, you know, we hold this person for a couple hours, whatever, even a week, you know. So the conversation kind of changes, right? And I think that's what really sticks out to me about your product, right? Is you're using the time lock feature that's inside the Bitcoin protocol, that currently your app, right, offers that 1 year, but the Bitcoin protocol, you can have a time lock for as much as you want, if I'm correct, Francisco. But you're using something at the protocol level to really help people, you know, from physical attacks, right? Or from, you know, let's say the social engineering attacks, which really require a lot of urgency, right? So, you know, if you're getting social engineered, usually what they do is that they try to press you to make a decision as soon as possible. This is where the time lock feature is your friend, because, you know, if they don't get you to make questionable decisions in a short amount of time, you start asking questions in your mind, and all of a sudden you're like, wait a second, this doesn't quite make sense. And then the social engineer attack kind of fails on its own. So I love your product. It's extremely unique. Haven't seen anyone, you know, build something like this yet. Yeah, guys, go check it out. Bitvault. So it's BITVAULT.SV, where you can download the app, and it's compatible with, let me check out 2 hardware wallets.
Jade Plus and Keystone Bitcoin only.
So Keystone and Jade Plus, and I'm sure you guys are working towards adding more wallets in the future as well.
Yeah.
Awesome. All right. Well, Francisco, thank you so much for joining me on the show today. Really, really appreciate it. I think I'll see you at the end of the year. I'll be in your side of the world. But awesome, man. Thank you. I appreciate it.
Thank you so much.
Awesome.
Thank you, everyone. Bye.
All right, everybody. Before we wrap up today's show, we do want to give a shout out to our sponsor, Opti, if you want to pull it up on your end.
I should have been more ready for this. I wasn't sure we were doing it.
Okay, so I'll do it then. God damn it, Opti. All right, guys, go check out Keet. It's awesome. It's a think about what passes through your family group chat in a normal week. School pickups, vacation plans, photos of your children, medical updates, home addresses, and financial decisions. You trust the people in that group, but do you trust the company operating the app? Keet gives families another option. It's a free messaging and video calling app built peer-to-peer. Not even Signal is peer-to-peer, ladies and gentlemen. The way that Signal works is you send a message, it goes to the Signal servers, and then it goes to the recipient, right? So Keet completely removes that. It's peer-to-peer messaging with end-to-end encryption, no centralized company database holding the family conversation. In today's world, where you see the European Union passing laws about chat control, the reason they can get away with that is because there's an intermediary to function as kind of like the extension of the state in a way, right? The awesome part about Keet is that it's peer-to-peer, end-to-end encryption that has messaging and video calling. Super, super important. You can create a family group, share files, photos, and make audio or video calls, all without turning your home life into another corporate data profile. Visit Keet.io/simplybitcoin. That's Keet, KEET.io/simplybitcoin. Download it for free. It's literally free. Doesn't cost you anything. Invite one person you trust and start a conversation that belongs to you. Go check out Keet.io/simplybitcoin. Truly sovereign messaging, end-to-end, peer-to-peer communication, the way we like it here in Bitcoin land, right? Peer-to-peer money, peer-to-peer communication, all about sovereignty, baby. Go check out Keet today. I have it. I've had it downloaded on my wallet. On my phone for a while now. Get started at Keet.io/simplybitcoin. All right, everybody. That was today's show. If you enjoyed it, I hope we provided you guys a ton of value. We brought the Trezor, one of the fellows from Trezor on. We brought the CEO of Bitvault, VAULT, on today to talk to you all about self-custody and all the solutions. So I think you guys, for our programming of the last 2 weeks, you've got your fair share, your full share of all the different options that you have now to take self-custody of your Bitcoin. Remember, self-custody is the revolution. And don't fear, just because of what happened with ColdCard, the tragedy of this, it's going to make the self-custody movement even stronger. Don't give your Bitcoin to BlackRock. Don't do that. We talked about that all about in the beginning of today's show. Take self-custody of your Bitcoin. That is your sovereignty. That is your power. That is your work. That is your energy. That is your life. Don't put it in someone else's hands. Take it into your own hands. Take your destiny into your own hands. All right, everybody. That was today's show. If you like today's show, you know what to do. Smash the like button, consider subscribing, and we'll see you tomorrow for a brand new episode of Simply Bitcoin Live.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.